For the last few weeks, I've been doing a countdown. 1 week, 2 week, 3 week, 4 week, leading to the last week / this week. This is where I felt the market was going to ultimately crash. The reason being is because I expected earnings growth to slow down. I expected GDP data to come out to show inflation was high and to show that we have technically entered a recession. All of those things, in my opinion, have come true. On Tuesday, I did my video saying the market looks to be reacting the way we thought it perhaps would, and we were going down. So did the market crash? No. It didn't crash. It actually closed out one of the best months that it's had. We're going to digest all of this, why this has happened, and why you can never time the market. What's the crack, everyone? Welcome back to Buy or Sell. I hope, of course, you're all well. So we've got actually serious amount of stuff to get through. What a week. Firstly, on Tuesday I did my video, and then on Wednesday and Thursday I took time off. It was my daughter's birthday, so it was a time where I was trying not to be active, although I was extremely active in the Discord. Shout out to all the Discord members. I love yous all. So let's just go to Investopedia. As always, the US equity market surged on Friday to post solid gains for the week and the month, and the best monthly performance for 3 major indexes since 2020. Growth on tech stocks led the charge on the heels of better than expected earnings, despite another rate hike of 75 basis points by the Fed, and a report showing unexpected decline in the second quarter GDP. Comments from the Fed, Jerome Powell, suggested the Fed might soon pull back on future increases, and trader bets on a 50 base hike at the Fed's next policy meeting in September rose. The Nasdaq and S&P rose over 4% for the week, while the Dow climbed 3%. Green energy and semiconductor stocks also surged as the bipartisan legislation that would boost funding for those industries made progress in the national's capital. The 280 billion Chips and Science Act of 2022 now goes to President Biden for signature and could be passed by the end of the next week. We talked about it previously with the stimulus checks. If you keep pumping money in, things will go up. It's only natural. Look at this debt calculation. No, we've been looking at this in the channel. The US national debt is over 30 trillion. This is a debt-based system. It's all to do with bonds, buying debt, issuing debt. When you go into a bank and you go, can I borrow £100,000? They go, okay, they give it to you. It's not that they've got it in the back. They just write you a fake bit of paper that just says you have 100,000 and you pay us interest. The money doesn't exist. I shared a short on my YouTube channel from Warren Buffett. I'll share the link to that. You can go in and watch it. He's pretty much saying these times are unprecedented. He's never in his lifetime seen this. He has also seen the price of the dollar fall by 93%. Money doesn't mean anything anymore. It's just a debt-based system. This chip bill is £280 billion, effectively of money being pushed straight into this market. In my Discord channel, we've been talking about semiconductor stocks, and there's actually a stock, semiconductor ETF. The reason I like this ETF is because it has every type of player under the sun. Johnson & Johnson. Some of the sun things, you go chips, that doesn't tie up. It's anything to do with chips. Tesla's in it, obviously, for obvious reasons. It's got all the big players, Intel, but it's also got a little smaller company that have anything to do with the chip making process. So that's a great ETF to be able to capture this. I've opened up a trade in them, and I opened up a trade in AMD, and we'll get through some of my swing trades. Another thing that the Fed keep throwing their hat on is, oh, well, unemployment's down. Massively down, we're doing very, very well, and I've explained the whole chimney thing. I said it's a bit topsy-turvy. Most people in society, their parents, their grandparents are all from bigger families than what you have now. Most people on average have 1 to 2 children, and that is about it. And the reason being is because of the costing and all the things that come with it. It's just crazy. So people back in the day would have had maybe 10 kids. So those 10 kids that are all retirement age there are now out of the pool. There's more jobs than there is people. Elon Musk himself has said that we have a population crisis. China used to do the rule where you're only allowed 1 child. Now they've taken away rules like that. That tells me that there is a labour shortage. We do have a situation where we need more people to come in to keep the system running. That is why you're seeing delays and all this craziness everywhere all around the world. And if you think about that, why do you think unemployment rate is so down? I also shared a link into my Discord for more information about that. Again, another reason to perhaps get into the Discord. US economy shrinks again, sparking recession fears. 1 day ago, prices for groceries, petrol and other basics rising the fastest pace since 1981. Fears are rising that a recession is coming if it has not officially started already. And then if we go to the Financial Times, is the US in a recession, measuring the slowdown in the world's largest economy? This is a chart that shows you the GDP and when a recession is looming. We can see in the 1980, one hell of a game in 1980 was recession. 88, we went into a recession. Dot-com bubble, recession. Where's this? Surprise, surprise. 08, then we had our situation back in March. What happened? Recession details. And then look, we started to tipple into this area. So where will it go? Well, it could easily end in a recession, but I did say that I believe inflation has peaked out and is starting to come down. So I do agree with that, but it doesn't make me believe that we're out of the woods yet. Now it is really going in the right direction. A lot of things pulling back, stocks doing very, very well. Bitcoin as well, which we'll get into. Here's the events calendar, plenty of things to be looking forward to. I'm actually just going to skip right through this here. Labour market moves, Labour Department reports next week could offer a glimpse of how the Fed's interest rate hikes are impacting jobs. I don't expect that to be too bad for the reasons I've already mentioned. Now, if we look at the SPY, we've covered this on the channel before, we are up 8%. Now, I don't want to be doom and gloom. I want to try and enjoy the good times. But again, I have to bring this to your attention, guys, because if we look back at March time, we can see that we went up 10% and look where it went. We can see from the lows of the highs here, it went up 7% and look where it went. The only way I'm going to change my stance on this market is if the S&P can get over and above, and I mean over and above, because we did do it back in March, went over and above, and then it just couldn't cope with it at all. If we can get above the 200-day moving average, this is my 180-day moving average. So you're looking at sort of a 13% probably rise, and you're looking at in and around another 5% rise needed on the S&P to get us over and above that level. But that is a lot of room there for a potential rally to come. As I always say in this channel, well, can't lie, can't speak. I prefer to work on charts. I always do prefer to work on charts. The reason being is because look at all the stuff that has come out this week. IMF cuts UK growth forecast for 2023. Shopify stock sinks 15% after company says it will lay off 10% staff. Then I put in this. This is a prime example of corruption. Got to ask yourself, why would the best companies in the world lay off staff, say hard times are coming, profits will be hurt, and the government say different? The government came out and says, nah, it's all right, not too bad. Indications, charts, everything else would say different. Here's how I view it in simple terms. You've got all the best companies in the world, Tesla with Elon Musk, Apple with Tim Cook, the list goes on, all reporting that future earnings could be declining. They are also laying off staff, all of this kind of thing. Then you've got the government who, let's be honest, at times can tell a porky or two. You have Jerome Powell saying, nah, we're all right, inflation's under control, we've got good bills coming out, we've got this. So if it looks like a duck, quacks like a duck, smells like a duck, feels like a duck, it's usually a duck. But Jerome is saying that it's not a duck, okay? So he's there saying his bit. Now, what is he doing? Well, he is trying to cool people's jets, and I get that he's trying to manage expectations, but what is also coming up in November is the midterm elections. Republicans appear highly likely to win one or both houses of Congress, given Democrats narrow control of the legislative branch and President Biden's declining approval rating amid economic uncertainty. Morgan Stanley's research team forecast 2022 GDP growth slowing to 2.6 from 5.7. Congress have been surprisingly productive with the bipartisan bills on gun safety, funding, semiconductor manufacturing, and possible breakthrough on democratic spending and climate change. That's just my thoughts, but something just doesn't quite add up for me. Now let's have a look at the S&P charts. Not again to be doom and gloom, but when we fell below our 180-day moving average back in the recession times, we did fall down 14%, then we rallied up, and then we went back down, we rallied up, and then we went back down, before ultimately finally finding the bottom. And where was that bottom? It was in and around a 60% pullback. The road was bumpy, and the bumpy road lasted 507 days. And during that time, we had many bumpy roads on the way down. I drew this line months and months ago, sort of saying this is the way I anticipate it going. And so far, it's gone pretty much to that. If we look from the highs to the lows, and again, I'm not saying you should compare these things, but we're down only 14% over a 216-day period. Again, previous performance is no indication of what's going to happen going forward, but it would make you feel we're not out of the woods yet. But I wouldn't be surprised if we did run on with all this news that's out there and the Fed obviously trying to pump things up. On the 22nd of July, then I said, look, Tesla should run up, looking in and around about the 860 mark. We actually adjusted that to about 875 as it went on. This was the level of roughly the support, but with that 180-day moving average, 200-day moving average, it just felt natural that it was going to run up to there. Again, the good thing about this market is you can feel like it's going down, but you can also play it when it's going up. Put in my targets for the day. I was saying, look, we're ever going to go up, we're going to go down. These are the targets. I started off going down on Friday, so I did a short, closed it out at a stop loss of about 0.5%, Then I went long on it once I got the confirmation on the charts. All in the Discord, all rolled up, got out at about 13%, closed it out at about 875, just because it was a day trade, didn't want to hold it any longer. That was fine, we closed it out. I've still got my full big position, and I made it very, very clear when this market was going down that you always want to be in the market. You might feel that it's worse to come, but you don't want to be out of it because you can never time it, and you can miss out on the potential rise that we have had here. Look at this dream that Tesla is, up 33.5% since the buy. Now I've been buying, I've been holding, I've not been worried about this. Good gains, sitting nice, no intentions of selling. Maybe we'll sell if we get rejected at this level. I will see how the week goes. Again, the Discord members will be kept up to date on that. And I only got the trade really on Friday because of being away with my daughter for her birthday. But look at AMD, again another one on the radar list, up 22%. I jumped in on Friday, 2 times leveraged, sitting nice on that, but my plan is to exit before earnings, even though I believe earnings could be good. AMD is now taking over Intel in terms of market cap. One hell of a gaping Intel's taken. Update, put in my Discord. As you know, I was short on Apple, but this market's turning around and it's going to go up. I'm not a foolish man, I'm going to close out my position. So I did close that out at about a 13-14% loss. And the main reason being is it's showing bullish signs. We are now above 180-day moving average, showing real strength. We'll see if it can push on. But when it's on that side of the things, you're not going short, and vice versa. So that's okay. The market's decided to turn around. It's starting to go up. We're in. We're making money. I am content. Until the S&P follows something similar to Apple, I am staying cash heavy. I'm being very, very conscious that there is a lot of money being pumped into the market. I'm just sitting it out. I'm not going to let this be the ultimate bear trap. We have done so well protecting ourselves. I am content just swing trading in and out, keeping tight on my stop losses. I've still got all my long holds, and on that, my long holds, the likes of ABML, Argo Blockchain, not much has really happened there. They haven't really moved, which again gives you an indication that it's the stocks that are being affected by these bills that are being pushed through. And if we have a look at Bitcoin, not doing a huge amount, one of the best months since October I've seen. Up about 25% from the lows, but we're still well below our 200-day moving average. We're below the 180-day moving average, sitting at about 24,000. So much more needed to come to really say that that's gone bullish. Also, we have Premier African Minerals bouncing off our support level. Tried to get a buy-in. I just missed out on it, and then of course it shot up on Friday. Typical. Coal Minerals is looking extremely sexy now. Again, this level of support is held up well. We're above all our averages now, bar the 180. We're getting close to it. Strength, momentum. I'm loving the Codal chart right now. Really, really excited about that. If you're interested in learning about those stocks, they're all covered on the channel. You can go check the playlists out. That's the video. A lot to pack in today's video. Hopefully, I've not put too much fear in this, but hopefully I've also given you a bit of balance there. Have a look at stuff that's going on out in China. Their housing market's on its knees. There's a lot of bad data coming out of China. I don't even want to get into it, but you think about the economical effects of all that around the world. There's so much to digest. We're by far not out of the woods yet. I'm sticking to the charts, but with that, if the charts are saying buy, I'm buying. I'm looking to start phasing in money this week properly, maybe going for a longer swing trade than just the day trades. I'm okay. If the markets are saying get in, I will get in, but I'm being very cautious still. I'm going to continue being cautious until the SPY turns around. And until that happens, we are not out of any bear market yet. You have to understand what is going on as best as you can and protect yourself as always. Please like and subscribe, help me grow the channel. The links are down below for the trading course. We have a summer sale on. You have wanted it. It's been 2 odd months now since we last had the prices below £100. The prices are below now. We're going to run a long summer sale. Take advantage of it, guys. Learn all about how to do all this. Get access for a lifetime into the Discord, all included. That will pay off dividends down the future. I would check out this video next. This video is going to tell you all about how to become a millionaire, how you can get in and out, compound interest your way to financial freedom. I will catch you in the next video. Peace.